Hi everyone, welcome to Toni on Real Estate Education. I am a New York State certified real estate teacher going on 9 years now. If you are interested in taking my certified 77-hour real estate salesperson's course or purchasing my ebook, the information is in the About section under each of my videos. Please hit that like button and subscribe to keep me motivated to keep these videos coming. Today we're going to be talking about capital gains tax exemptions, also known as the 250,000, 500,000 rule. So what exactly is this tax exemption and how does it work? Imagine that you have decided to sell your home for whatever the reason. When you sell your primary residence, any profit you make from the sale is considered a capital gain. Now, Uncle Sam typically wants a piece of that pie, but here is the good news. The IRS offers a special tax break for homeowners called Capital Gains Tax Exemption. Here's the rule. If you're single, you may exclude up to $250,000 of capital gains from the sale of your primary residence. And if you're married and filing jointly, the exclusion doubles to $500,000. Here's an example. Let's say you bought your own home for $300,000 and sold it for $550,000, making a profit of $250,000. If you're single, you can exclude the entire $250,000 profit from your taxable income. And if you're married and filing jointly, you can exclude up to $500,000 of the profit. Understanding these exemptions can be incredibly beneficial if you're planning on selling your home. They can help you save money on taxes and keep a lot more of the profit from the sale in your pocket. So if you're thinking about selling your home in the future, remember to keep these rules in mind and consider consulting with a tax professional. My past real estate students are always telling me that the capital gains tax exclusion pops up regularly on the state exam. Now, there are a couple of things that I would like you to take note of. First, these exemptions apply only to the sale of your primary principal residence. Secondly, you must have owned and lived in the home as your primary residence for at least 2 out of the last 5 years before selling it. This means you can't flip houses for a living and expect to qualify for this tax exemption. And then lastly, the seller must not have sold a home in the last 2 years and claimed the capital gains tax exclusion. And that's it for today, folks. If you found this breakdown helpful, don't forget to give me a thumbs up and subscribe for more videos like this one. Thanks for watching, and I will see you next time.